Brad Williams, Frugal Finance. We haven't run across this situation in a while, probably since COVID, but extreme market volatility in the stock market. What are some of the guardrails? In the past, and this is long ago, I used to be a stockbroker. I started in the industry on Black Monday in 1987. That was my official first day as a stockbroker. There weren't many guardrails at the time. In that particular case, the market dropped 32%, I believe, in one day. The good thing is I didn't lose any client money. I didn't have any clients at the time. But the idea of guardrails, let me explain what that means. Fluctuations of market indexes and stock prices is normal, with gains and losses occurring daily. This movement is called volatility. The greater the price swings, the higher the level of volatility. They have a VIX indicator, which is the volatility index, and it tracks market volatility, and traders use it as a gauge, also as a means to trade, make money, lose money. However, there are guardrails in place that help protect security markets against periods of extreme volatility, both in individual securities and the market as a whole. Single stock trading pauses. Trading in individual stocks is sometimes halted or delayed for various reasons. For example, exchanges have rules requiring trading in individual stocks to be halted during the day or delayed at the beginning of the trading day to allow the market to digest any significant new information about the company. The exchange and FINRA are also participants in the Limit Up, Limit Down, or LULID plan, which pauses trading in individual listed stocks when stock price swings in those securities reach certain price levels. The LULD, the Limit Up, Limit Down plan, was designed to moderate market volatility by preventing trades in listed stocks from occurring outside specified price bands. The price bands for a given stock are set at a predetermined percentage level above and below the average price of the stock over the immediate preceding 5-minute trading period, continually calculated on a rolling basis. If a stock price moves to the designated upper or lower price band, the stock enters into a limit state. Generally, if the stock price doesn't move within 15 seconds of entering the limit state, trading in the stock is paused for 5 minutes. The percentage parameter used to calculate the price bands varies depending on the security's designation as either Tier 1 or Tier 2 security and the previous closing price. The percentages that apply during most of the regular trading sessions are as follows. For securities in the S&P 500 or the Russell 1000 index and some exchange traded products, 5% if priced greater than $3, 20% if priced from 75 cents up to and including $3, and the lesser of 15 cents or 75% if priced less than 75%. For all other securities known as Tier 2 securities, 10% if price greater than $3, 20% if priced from 75 cents up to including $3, and the lesser of 15 cents or 75% if priced less than 75 cents. The Limit Up, Limit Down plan applies during regular trading hours from 9:30 a.m. to 4 p.m. Eastern Time. The LULD price band percentage double for all Tier 1 stocks as well as Tier 2 stocks priced at or below $3 between 3:35 p.m. and 4 p.m. Eastern Time when trading volumes tend to be heaviest. Rights and warrants are excluded from LULD rules. The LULD rules also don't apply to non-listed stocks known as over-the-counter equity securities. Information about current trading pauses for exchange-listed stocks is published daily by each listing market. A trading pause must be observed by all other markets and also applies to off-exchange trading in listed stocks in the OTC market. The pause across all markets allows time for buyers and sellers to assess the situation and act accordingly. A pause is set to last 5 minutes, but the listing market for the pause stock can extend it another 5 minutes if there's a significant imbalance between buyers and seller orders. If a security is in a trading pause during the last 10 minutes of a regular trading hours, the primary listing exchange won't reopen trading and will attempt to execute a closing transaction using its established closing procedures. Market-wide circuit breakers. Sometimes market-wide volatility is so severe that exchanges and FINRA halt all trading rather than just pausing activity in the single stock. These halts apply to the entire stock market, known as a market-wide circuit breaker. may suspend trading temporarily, or may close the markets before the normal close of the trading session. Market-wide circuit breakers are triggered by severe market declines as measured by the decrease in the S&P 500 index from its closing price the previous day. There are 3 circuit breaker thresholds that can trigger a market-wide trading halt. Level 1, 7% market price decline. Level 2, 13% market price decline. Level 3, 20% market price decline. A level 1 or level 2 decline that occur between 3:25 p.m. will halt trading in all listed stocks for 15 minutes, but a similar market decline or after 3:25 p.m. won't trigger a trading halt. However, a level 3 decline that occurs at any time during the trading day will suspend trading in all listed stocks for the rest of the trading day. If a market-wide circuit breaker is triggered, trading is suspended on all exchanges, as well as for listed stocks in the OTC market. Comment, let me know if you understand what this is, if you've been through this, if you've had some victories or some absolute defeats due to the severe market volatility. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.